I'm so glad you're with us on the Clark Howard Show, where it's all about you. I need you to learn ideas from me that will help you take charge, take control. Whole goal is for you to be your own boss with your wallet. Our web address, clark.com, CLARK.com. If you have a question for me, clark.com/ask. Coming up in 20 minutes, a follow-up Clark-rageous moment. This was so weird, but one big American company went to court to try to prevent another American company from using the word thanks, that you couldn't thank your customers. I mean, totally Clark-rageous. Wait till you hear what happened when this silly thing got before a judge. And later this hour, we are overstored in America. Way too much retail square footage, way too many stores. And that, coupled with the election, is going to lead to a lot of bargains this fall. I'm going to tell you what you need to know to save money when you shop. We got to have a serious talk here. I cannot even begin to count over 29 years how many phone calls I've gotten that have involved hurt feelings and worse, where someone has co-signed a loan for someone else. And when we started talking about it, there was a study done that creditcards.com did about how many of these co-signing situations blow up on people. And it just started this instant chatter in our pre-show meeting with staffers talking about, gosh, remember the one about the girlfriend calling about co-signing for the boyfriend and all that stuff? I mean, then somebody else said, well, that's nothing. Let me tell you about this one that happened. So co-signing is very, very messy. What co-signing is where you give someone else the privilege of being able to borrow money, but you take on all the responsibility. And somebody needed you as a co-signer because they weren't good for the money themselves. What happens is that 4 out of 10 times, the person who co-signed ends up having to pay the loan. 4 out of 10 times. Those are not good odds. And more than 1 in 4 times, almost 1 in 3, the co-signer's credit gets trashed. And people co-sign for all different kinds of things. But here is the ultimate. You co-signed because of love, obligation, respect, whatever, for a family member or a friend. In more than 1 in 4 cases, the people can't stand each other anymore. They ruin their friendship, relationship, whatever, because of having done the co-signing. So co-signing is something you do not take lightly. You have to fully be aware of the consequences of co-signing. Now, you will hear me, after you've heard this, you'll hear me with somebody calls who's asking about co-signing a loan, and I will not be fierce about don't do it. I want to hear them out and hear the situation. I will make sure I tell them the risk. And sometimes people say, oh, I know that. Forget it. I'm going to do it anyway. As long as you know and you're willing to deal with the risk, that's your choice. The better idea, though, remember that if you co-sign for somebody, it is as if you have had the benefit of the loan. You didn't, but you are responsible for it as if you had the benefit completely. So if you are going to take on that obligation and 4 in 10 times it doesn't work, the better choice is for you to make the loan to the individual and have that individual pay you. That way you're not putting your credit at risk. Remember, you got a 4 in 10 chance they're not going to pay anyway. So you make the loan. And the way I talk about those loans is this. Whenever anybody asks me, you are making a gift and you're really shocked if it gets paid back. If you're not in a position to do that, then you should not be involved in cosigning. Because if you're not in a position to afford to make that loan to the individual that you're being asked to cosign, remember, you got a 4 in 10 chance you're going to be making those loan payments yourself. If you couldn't afford to do it, you can't afford to have to make the payments. Mike is with us on the Clark Howard Show. Hi, Mike.
Hi, Clark.
How are you?
I'm doing well today, and you?
Great, thank you, Mike. You got a question about your mom.
Yes, my mom's in her late 70s, and she's still working, and she has to work to still make the payments on her mortgage. And I'm wondering if she should take out, she really wants to stay in that house as long as she can, and I'm worried that if she gets sick or something, that she doesn't have enough savings to, give her a couple more years in that house before she has to sell it. So we were thinking of maybe having her take out a home equity line of credit.
So you would use the home equity line as a standby in the event she hits a point where she can't make the payments. She would then borrow against the home equity line to make the payments?
That was my original, that's my thought, yes.
That is a potentially viable strategy. You said she's 78.
Yeah.
So she's not going to be in the house another 10 years likely. That's not the goal, is it?
Well, it's hard with her because I've always thought that I would never be able to get her out of that house. I mean, the house is worth like $1.4 million, and she only owes about $231,000. But she's really attached to living in that house. And
she's still working because not because she wants to, but because she has to?
Yeah, she, if she stops working, she will not be able to make those, she won't have enough money to live even with her renter and her Social Security.
Because there's something that I very rarely recommend, and I spend most of my time discouraging people from doing, that may actually be appropriate in her situation. And that is something known as a reverse mortgage.
Right. I know you don't like those.
But in this case, a reverse mortgage may be the right option. Here's the reason why. She's got massive equity in this home. So that equity just sits there, and unless it's very important to her that maybe her kids inherit that money or the house or whatever, she could turn that obligation into instead a payment to her every month. Where with a classic reverse mortgage, the mortgage company pays her every month against the equity that exists. And then at the point that the home is sold, the balance on the reverse mortgage is paid off.
What are interest rates like for those?
Interest rates are pretty low right now. You don't get the lowest in the market on a reverse mortgage, but it's a very decent rate. And remember, the mortgage is paying her instead of the other way around.
Right.
So she wouldn't have to work anymore. At 78, if she doesn't want to work, it's a shame she's having to work.
Yeah.
So it in a sense, takes away part of her independence. Because the reverse mortgage, you put that in place, and it is the house working for her, paying her, but then she has the new independence of not having to go to work.
Is there any reason why we wouldn't want to do the HELOC?
You mean as an alternative? If she's willing to keep working, no, the HELOC is a good backstop, particularly with the amount of equity she has in the home. The HELOC costs virtually nothing to set up. It sits there as a standby line of credit for her. The interest rate floats, but it would serve the purpose that you originally stated for it. But I'm thinking again about her being 78. Right. And does she want to keep working?
Would the HELOC be like a could we use it as like a temporary for the next couple of years if she took some money out on a HELOC? They say they could give her $50,000 only.
Why only $50,000 with $1 million in equity?
I'm guessing that she's not shopped around enough.
Yeah, that sounds like that to me. Why don't you help her with that?
Okay.
But yes, your idea, if she keeps doing what she's doing, the home equity line would give you like the backstop, the reserve that she might need at some point till the home is sold. Deborah's with us on the Clark Howard Show. Hi, Deborah.
Hi.
Deborah, you want to talk about college students and credit?
Yes. I have a 21-year-old daughter who is interested in getting a credit card of her own or in figuring out a way to start building her credit. And I wondered how it's best for her to do that and also how she knows what card is a good card to take on.
That's a great question. Just about every major issuer has a college student credit card program that's designed for college students that are full-time students when they reach their 21st birthday. And those card programs generally are no annual fee cards but have very high interest rates if you don't pay the balance in full. So if she pays whatever she charges on the card, pays the balance in full, then the cards are all fine. The problem comes if she ends up charging what she can't afford to pay, and then she'll pay sky-high interest rates. If you ask me, though, what are the best of the college student cards, they're from credit unions. Has she joined a credit union where she's at college or back home?
She actually belongs to the one that I belong to. She has a checking account with a debit there.
Well, then that's perfect. She's already an existing member of that credit union, and if the credit union is of any size at all, they'll have a college student credit card program.
Okay. And is that the best way for her to develop a credit history?
100%. The easiest glide path to anyone establishing credit today is with a credit card.
Okay.
And so what's so unique for college students is that college students are the only group I know of that the normal rules for applying for credit are waived. Because college students, financial institutions want the college students because the first or second credit card that somebody gets, they stay loyal to often for decades. So that's why, and college students tend to be a very profitable market because the first thing I said to you, that they tend to run balances and then have to pay interest at very high rates. Added in that the banks have seen through experience that if a college student gets in way over his or her head, the parents most often bail them out. So the risk level is very low to the banks and the reward very high.
Okay, great. Can I ask you a follow-up quick question?
Sure.
So in giving advice to her, as she uses this checking account with a debit, the way I've always tracked my expenses is with a check register. For her, that seems really obsolete to have paper and pen and carry that around.
I'm with her. Okay. MINT, Mint, either as an app or as a .com, is a much more efficient way to track spending if someone is electronically oriented.
Oh, okay. So her checking account and her debits, she can track there.
Completely, unless a small number of financial institutions are threatened by Mint maybe stealing their customers and they've not cooperated with Mint. But for the most part, Mint is a beautiful platform to track expenses and also to help you budget. In just a second, we're going to have the Clark-rageous moment, but I want to hit you with a sizzling deal first. There is an Amazon exclusive today on Ooma. Ooma is the best phone service out there, according to research done through the years by Consumer Reports, for home phone service. The special deal includes all kinds of gadgets with it, and you pay for the Ooma device, and then it's your phone service for the life of Ooma, however many years that is, at clarkdeals.com or deals.clark.com, or just go to clark.com and look for our deals section. You can find the information on the UMA special for today. Click over to it and buy the deal and stop overpaying for phone service at your home if you still have phone service at your home. Now let's talk Clark Rage. Who owns the rights to saying thanks or thank you or anything like that?
Scams, ripoffs, outrages. It's a Clark Rageous moment.
This is a follow-up Clark Rage on one of the most ridiculous things ever. As if people don't have enough going on in their lives, Citibank sued AT&T because AT&T has a program where they thank their customer called AT&T Thanks. And its employees are supposed to say, thanks for calling AT&T. Well, Citibank felt like they had an exclusive to the words thanks and thank you, that was commercial speech that they controlled and that others could not thank you for anything or say thanks for anything. And thank goodness a federal judge said, now, Citibank, you can come and sue me. I'll say thanks, thank you, thank goodness, anything like that. Come in after me. A judge said, ridiculous. If AT&T wants to say thanks to its customers, they should have the right to say thanks to them. How silly. You know, a bank should spend its time trying to figure out how to serve its customers better rather than try to prevent somebody else from exchanging a common pleasantry.
Rocket Mortgage by Quicken Loans proudly supports this podcast. Rocket Mortgage brings the mortgage approval process into the 21st century. It's fast, powerful, and completely online. You see, Rocket Mortgage has taken all the complicated, time-consuming parts of applying for a mortgage out of the equation. Hate searching through stacks of old files and paperwork? Well, with Rocket Mortgage, you can easily share your bank statements and pay stubs at the touch of a button. It helps you get approved in minutes for a custom mortgage solution that's been tailored to your unique financial situation. Even better, with Rocket Mortgage, you can do all of this on your phone or tablet. It's a quick online process that you can manage from the convenience of your couch. So if you're looking to refinance your mortgage or buy a home, check out Rocket Mortgage today at quickenloans.com/save. That's quickenloans.com/SAVE. Equal housing lender, licensed in all 50 states. NMLSconsumeraccess.org number 3030.
Welcome to the Clark Howard Show, where it's about you learning ways to save more and spend less, and don't let anybody ever rip you off. Clark.com is the web address. We got a question, clark.com/ask. Macys made a lot of news, not in a good way for Macys, and the stock went way up. Macys announced they were going to close roughly 15% of their stores and lay off thousands of people. Maybe they'd be able to find jobs at other Macys. And so what does Wall Street do? The stock goes up when they report bad earnings because they're closing a lot of stores. And the reality, the department store business is dead, 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 dead. People don't shop that way anymore. A lot of clothing stores having a tough time. Not necessarily dead, 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 but they're having a tough time. And this year, we in America are frightfully overstored. If you are, in fact, a retailer, great for you as a consumer. This year is going to be a year with, through the fall, fantastic deals on clothing and housewares, that kind of stuff. Anything pretty much for the home that's, they call them soft goods, I guess. Sheets, pillowcases, blankets, towels, any kind of clothing, men, women, children, you name it, shoes. We are vastly overstored. The other thing is people have not been into clothes as much as they used to. You know, I wear the Clarkiform, a very dull outfit, if I do say so myself. And I know that what I'm paying for Clarkiform pieces, golf shirts, that kind of thing, has gone down, 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 down. Not just on a clearance sale or anything like that. I mean, just the prices going down. because people don't have that level of interest as they used to in fashion. So this is going to be a time that, as they like to call in retail, heavily promotional, which is another way of saying they're going to be killer deals for you as you go out and shop. Ultimately, we're going to have to find all kinds of new uses for strip centers and malls and all that. I think about the areas of the subspecialties of architecture now that all they do is they take on failing malls and figure out how to come up with a new use for them, because the malling of America is over and a huge percent of the malls will cease to exist as we know them. I know a lot of people would automatically jump to the conclusion that it's because of online shopping, and that is a factor, but it is not the dominant factor. The dominant factor is that people have learned that they much prefer shopping in smaller retail centers rather than in a giant mall kind of environment. And people don't like doing all the walking you do in the malls. They like being able to pull up close to the door of the store that they want to go to. So when you walk in a mall outside of a key holiday period, and they're pretty lonely. And so the deals that you're going to find through this fall and through the Christmas shopping season are going to be great. Tim is with us on the Clark Howard Show. You have a shopping and money-saving question for me, don't you?
Yes, I do.
So what are you thinking of doing to save money, Tim?
Well, I got a coupon in the mail last week, and I wanted to call you on it and get your take on it. It basically says that I can go to this website, and I can download their application, and I can go to, say, like, for example, on Amazon or something like that, and I can make my selection and purchases and stuff like that. And then while I'm making those selections, it will go through and use their software, I guess, in order to find a better price for me, so I can get something cheaper.
Are we talking about Invisible Hand or something else?
No, I'm talking about a different website.
Oh, go ahead and name it.
Name that website. I can name it? Okay,
yeah, please.
It's wikibuy.com.
Oh, yeah, Wikibuy. So if you use the Google Chrome browser, it just becomes part of when you're shopping somewhere, and it works in the background, and if there's a cheaper choice for something, it will pop it up. And the longer-term competitor to that is the one I thought you were asking me about, Invisible Hand.
Oh, okay.
And so these things are very good tools. I especially recommend using Wikibuy or Invisible Hand if you tend to be a big Amazon Prime shopper.
Okay.
Because people that are Amazon Prime shoppers tend to become too oriented to Amazon and don't realize many times that you're overpaying for stuff when you shop on Amazon. And so having Invisible Hand or Wikibuy shopping in the background, and suddenly you'll say, hey, you can buy this somewhere else for $22 less or whatever. It's a great check on you before you just click to purchase on Amazon.
Okay, that sounds like a deal.
And Wiki is Wikibuy, wikibuy.com.
Okay, thank you, Clark.
All right, and try it. You know, I've never done this. Maybe I should do both. I've never tried both Invisible Hand and Wikibuy. I wonder if they can both run in the background at the same time.
Yeah, I don't know. It's the first time I've ever heard of it. That's why I figured I'd ask you if you heard anything about it or if you had any dealings with it and see if there was any gotchas.
No, I know of no problems. I've had Invisible Hand for years, and the only thing that's an annoyance to me is when I print out an airline boarding pass, because I travel a lot, it'll print their logo on my airline boarding pass, which is some kind of bug in their system, I guess. And fortunately, it's never caused me a problem at TSA security.
Okay. Well, thanks for your help.
Sure. Have a great day. Stephanie's with us on the Clark Howard Show. Hi, Stephanie.
Hello, Clark.
You got a question for me about Social Security.
Yes, I do. I'm 62, and of course I'm eligible to begin drawing I wouldn't be necessarily dependent on my Social Security. My husband is still employed, thankfully. But we're wondering if we should use that little amount that we would get per month to begin paying down some debt that we have, including the mortgage on our residence, and then we own some farm property that we have a small, like $65,000 a mortgage on that. So that's my question.
So as far as taking Social Security at 62, my first answer at best is always maybe, but usually no.
Okay.
Because the increase in benefit that you receive for every year you delay taking Social Security is so large.
Yeah.
And if you're not in a position that you need the money, it might be nice, but you don't need the money. Later in life, you might need the money. And a much larger monthly check in later years may be much more valuable for you.
Okay, so... excuse me.
But I'm giving you a general answer. Can I help you drill down to exactly specific for your and your husband's situation?
Okay, yes, that would be helpful.
For $40, you can buy a software package that will run your and your husband's exact circumstance and help you figure out the ideal moment for you to start receiving Social Security.
All right.
It's called Maximize My Social Security. It's a .com. And
okay, and it's not abbreviated to SS. It's socialsecurity.com?
Fully spelled out. MaximizeMySocialSecurity.com.
Okay.
And you pay them the $40, and then you're able to run the analysis deeply into your exact scenario, and it will guide you on whether you should delay. Now, again, most people should delay. Very few people do. And maybe you'll be someone that you're not most people, and maybe you are better off taking it at 62. But generally, the later, the better.
So this software package will take all of our financial info.
No, it will only take certain facets of what you have paid into Social Security, what your earnings would be from it now, what it would be if you waited, and it will help you figure out the optimum moment to take Social Security. It cannot take the variables of, well, we have this mortgage and we owe this on it and we have this, but it will tell you that, the debts you have that you might accelerate paying off on and things like that, it's actually irrelevant to the calculation of when would be the optimal moment financially to take Social Security.
Okay. All right. Because I see the difference. I mean, mine is like $758 a month if I take it now, and then if I wait until full retirement, it's another $200 a month.
So think about how much additional that is per month, and then your increases from cost of living are based for the rest of your life on that higher initial amount you would get waiting 4 years.
Okay.
So there are people who get very upset with me on this, saying, well, what happens if Stephanie doesn't live as long as I'm calculating? Because, I'm just going with actuarial, and unless there's a history of people not living very long in your family, it would automatically generally make sense to wait.
Right, okay.
But don't go automatically generally. Get very specific, and $40 is no money for you to be able to make the right decision.
Okay, very good. I thank you.
Sure, best to you.
All right.
Sure. Cindy's with us on the Clark Howard Show. Hi, Cindy.
Yes, hello.
Hi, Cindy. You have a teenager that you want to talk about how they are handling money. Is that right?
I do, yes.
What's the story?
Well, the story is he's 13 years old, and he came home one day from school saying that his teacher was talking about investments and was telling them about some young kid that had invested in the stock market and is now very wealthy. And so they watched some sort of video about that person, and then he's just started talking about money and his own portfolio, and just encouraging kids to save and be wise with money. And So he came home and said, I want to invest in the stock market. And I'm like, well, I have no idea, but we listen to Clark Howard all the time on the radio. So, hey, let's ask Clark. So we're asking you if it's even a possibility.
100% a possibility. My favorite starting point for a teenager who's motivated to save and invest for the future is to look at opening an account at Charles Schwab.
Okay.
The big discount broker.
Yes.
They allow kids to open an account with a much smaller amount of money than adults. I think it's as little as $100.
Okay. Now, is this more of like a savings account?
No, this is where he can actually invest. He can buy stocks. He can buy the best thing that I believe for someone starting out is to own what's known as index funds, where he owns little pieces of thousands of different companies.
Okay. And
Schwab makes available the ability to go into what's known as a broad market. They call it ETF, or exchange traded fund, where he could go into it and he'd own little pieces of roughly 3,000 different American companies.
Okay.
He'd be a mogul. I mean, think about that.
I know.
At 13.
I know. Well, we listen to you a lot, and I try to teach them the best I can of learning from my mistakes. And but I've also heard you talk about like Fidelity and Vanguard. So I went on those websites, and how do you choose? Because they all sound very similar and all sound very great.
Well, they're fine. I mean, they're all fine. It's just the difference is Vanguard, as I recall, you need a minimum $1,000, and most 13-year-olds aren't going to have that.
Well, he does, actually.
He does?
He does.
Wow.
Yeah, him and his brother have been great savers, and so they have, a little bit of savings. It's in a savings account.
Well, like, for example, if he opened an account at Vanguard for $1,000, he could go into something I like as a starter fund, especially for teenagers, called the Star Fund.
Okay.
Which teaches the idea of diversification, how you diversify money to lower the risk but give you a good long-term reward.
And that's at Vanguard.
Right. It's called the Vanguard Star Fund.
Okay. Okay.
But any of these companies are great companies. If he's got more than $1,000, they're pretty much all available to him. And the way it plays is once the account's set up, the amount of investment education available from these companies on their websites is fantastic. And because he's actually in investments, it feels more relevant and real, and he's much more motivated to learn.
Okay, and then would this be like a custodial account?
Yes,
then?
It has to be.
Okay.
And then the money becomes his when he turns, in most states, 18.
Okay. That's so awesome. Thank you so very much.
Sure. The only bad part is that having money in his own name in a savings account, bank account, investment account, ultimately affects eligibility for college financial aid.
Okay, sure.
That's the one really downside to a kid being a good saver. You got questions, we got answers. That's what we're about on the Clark Howard Show. You got a question, you want to get it answered. We have off-the-air advice available for you 9 hours every weekday for free. You can talk with a member of Team Clark. You can see how to do that at clark.com. You also can post a question for me that Joel, our producer, will read. We call that Ask Clark. Who do you have one from, Joel?
Clark, we got one from Bob, and he left a pretty funny one. So listen to this. He says, Clark, I understand you're so cheap, virtuous, that you're leaving your body to science. I, too, wish to be so noble as I have few plans for my body once I expire. Then there's also the added benefit of saving my loved ones a costly funeral. Cheap to the end and then some, they'll all say about me. So how does this work? Does a truck drive around picking up bodies for science? Does it preclude organ donation? Will they leave a bobblehead doll in exchange? And where can I find more information?
Oh, boy. Okay, so if you wish to donate your body to science and there's a medical school near in your community, you can contact them and find out what their procedure is to donating your body to the medical school. And You might be part of scientific research. Now, also, you can choose to donate your organs and then donate whatever's left to a medical school. And then you get the double benefit of your eyes, your heart, your liver, who knows what, living on kidneys, living on in somebody else, whatever is worthwhile for somebody else to use. And then you make the rest of you available for science. You eliminate any cost for your family, a disposal of you. And I know there are people for religious reasons who can't stand me talking about this. You have to make personal spiritual choices about this stuff.
You know, when you're going to buy a car, pricing information is great and necessary. But there's more to doing it than just the price. There's the actual buying experience. If you want to enjoy a better one, you should go to a True Car certified dealer. They're there to help you find the car that you want, and they're also what make True Car unique. With True Car, you can connect with a local certified dealer that you choose, so you can lock in a guaranteed savings off the MSRP and enjoy a totally better buying experience. And by better, they also mean faster. Over 2 million cars have already been sold to True Car users who have visited their True Car certified dealer. And there are over 11,000 True Car certified dealers nationwide, so it's probably pretty easy to find one near you. And check this, for a new car, average True Car users save $3,279 off MSRP. All right, so you're probably wondering, how do I do this? It's easy. Just go to TrueCar.com or, right there on your phone, download the True Car app. You can find the car you want, see the True Car pricing curve, which shows you what other people in your area paid for the same car, and that way you can know you're getting a good price and feel confident. Then you'll get a guaranteed savings certificate from the True Car certified dealer. Go to the dealer, and your guaranteed savings off MSRP will be honored, and you enjoy a quick, easy experience. How's that for car buying? So when you're ready to buy a new car, or even a used one, visit TrueCar.com or download the TrueCar app and enjoy the better car buying experience. Some features are not available in all states.
As we speak, stock markets are at new record highs today. I'm going to tell you what decisions you should make with stocks in rarefied air. That's coming your way in just 30 minutes on the Clark Howard Show, where it's about you learning ways to keep more of what you make on the web at Clark.com. When you have a question, Clark.com/ask. I have taken just the most upsetting calls from people who bought life insurance years ago to decades ago that now are getting hit with what are known as capital calls or premium increases or whatever each insurer calls them, where they say, oh, well, you know, that insurance policy we sold you that you paid into for years and years and years, it's not working out for us at the insurance company. So we're invoking a clause where we're going to raise your premiums 500% or 3,000% or whatever. If you don't pay, well, we're just going to keep all the money you paid to us over the years and you have no life insurance anymore. It is absolutely a despicable practice of the life insurance industry. And according to a New York Times investigation, insurers have been able to invoke these clauses by going through complex financial maneuvers that make the insurance companies look insolvent, where they pay out money to stockholders of the insurer to the point that the insurer is no longer financially sound. And then because they're no longer financially sound, having paid out all this money to their stockholders, they then can invoke the clause in the insurance contracts that tear up the premiums that you had agreed to years or decades before. It affects especially an ultra trashy life insurance product called Universal Life, Variable Universal Life, Index Universal Life, anything that has in its name Universal Life. It has been an absolute time bomb for people and is sold by insurance companies as a way for you to own insurance where you buy the product, and the beauty of it is that ultimately the policy is so fantastic that it'll just pay for itself. But instead of these policies paying for themselves, they end up running into the ground, and you're left with these impossible choices of either paying phenomenally higher premiums or losing every last penny you paid in. Plus, on top of it, you may have a tax problem if the policy goes insolvent. It's really, really an ugly scenario. Now, there are a number of lawsuits against insurers for purposely killing off their solvency by paying money out to their owners so that they then could try to raise premiums on you. We'll see how that plays out over the years, and it could go on for years and years and years in the courts. The key, most important rule for you is you never, ever, ever, not ever, should consider buying a piece of trash universal life insurance policy of any type or kind. The truth, for probably 99% of American adults, the only life insurance you should ever consider is something known as level term insurance. It is a death insurance policy. There's no savings to it. There's no quote-unquote living benefit. All it does is if you die, the people who depend on you for income get money, period. That should be the purpose of life insurance. The reason that nobody ever talks about level term insurance is there's no real money in it for commission agents and no money in it really for the insurance companies, because level term insurance is so easily to compare one company to another with shopping on the internet. And I've got a bunch of stuff at Clark.com how to shop for level term insurance on the web. When you are looking to provide financial security for your family, it is ultra cheap, costs a tiny, tiny, tiny fraction of what this universal life junk costs, and it actually works. So here's the thing. Because of the way the commission structure works, an agent can't even afford to put gasoline in his or her car to drive to see you to write the policy for the commissions they'll earn on it. So you're seldom, if ever, going to hear from an agent about how great level term insurance is, because they have to earn a living, right? And they're not going to be able to earn it selling you what, remember, 99% of people should be getting, which is the beauty of being able to comparison shop and buy it so easily on the web. Mike is with us on the Clark Howard Show. Hi, Mike.
Hi, Clark. How are you?
Great. Thank you, Mike. You are thinking of leaving the United States of America.
Well, you know, every once in a while I come across articles about people that can retire overseas for dollars a day, and I see pictures of them on the beach, and it's looking really good. I'm wondering, is that realistic? Is that a good idea?
Well, it is realistic. If it's a good idea, depends on you and what you might enjoy. And what I've recommended to people who've considered leaving the United States in retirement to have a much lower cost of living and be able to take the money you have and live like a king, that you go live in a place first as a renter and see if, first of all, you like the idea of living elsewhere in the United States, learn the lay of the land there, and maybe go live somewhere for a minimum 3 months, but probably more like 6 months, and see if it's what you want. One of the staffers on the show has relatives that went to live in a tropical locale, and it had always been their dream, and within a year they were already back stateside. It was not for them. And then others will go. I have relatives who moved long ago to the country of Panama and would never leave. They love it so much.
Yeah, Panama was on the top of my list because, you know, English is spoken widely and they use the dollar, so it wouldn't be that big of a transition from the U.S. to Panama.
And medical care is supposed to be very good in Panama, and access to service is very good there. So it's become a very, very popular place, although the cost of living in Panama has gone up as Panama's per capita income has risen, and it's become a much wealthier place for Panamanians than it used to be.
So realistically, how much does it actually cost to live in places like this?
Well, it all depends on how deep into the third world you go, how much cheaper your living costs will be. And so it is a very it's a varied picture. You know, there are Americans, particularly on the West Coast, who will go to an Asian destination to live. There are, ironically enough, there are a lot of Americans, Canadians, and Australians who are living in Vietnam now in retirement or semi-retirement because it's so inexpensive to live in Vietnam. There are these magnificent resorts there you can live at that are very, very cheap. And so this is something people do. It's just a matter of something fitting your lifestyle. I almost would have you consider going one place like Panama for 3 months or 6 months, and then maybe go try somewhere else for 3 months or 6 months. Don't look at it as you need to just go somewhere and put down deep roots, because you just don't know if you're going to adapt to it.
Right. Is there a good resource to research these different places?
There are a lot of bloggers that write specifically about expat living and retirement. I don't know that I have one in particular that I can recommend or advise. But if you mentioned Panama, if you start looking at what people are blogging about living in Panama as a retiree, as an example, or any other country, you'll really start getting a feel. Like a lot of places, the laws on property ownership are a real trap for you as an American. And there are countries where you would really only want to ever be a renter, not a property owner. And a lot of Americans will get in too deep where they'll buy a place, and because of differing laws on property rights, private property rights, you end up throwing money down a rat hole because you really don't own the place. You might have a land lease or, a long-term lease that you paid hundreds of thousands of dollars for. So this is an area you start slowly, and you only get further in as you become more knowledgeable about the place you are and more comfortable with it being where you want to be. And on TripAdvisor, there are a lot of forums on TripAdvisor where people are posting about living in various places as an expat.
Okay. Is it a hassle to apply for Social Security living in another country?
Oh, no. I mean, this is so common. This is such a common activity that people do that it is not a hard thing for you to continue benefits that you have earned in a foreign country. Some of the bigger issues are, obviously, we alluded to it earlier, are the questions of medical care. But again, how your dollar stretches living as a retiree in a foreign land, it's just amazing. Do you know the other place people are living right now that may surprise you, Mike? It's a big problem for the cruise industry that people are living in retirement on cruise ships.
Oh, never heard of that.
Yeah, so there are people that love doing that and live on cruise ships year-round. And it's a very controversial thing within the managements of the cruise companies, people doing it and whether it's a good thing or a bad thing for them. But it's cheaper for many retirees to live on cruise ships than it is to live on land in the United States. Emily is with us on the Clark Howard Show. Hi, Emily.
Hi, Clark. It's good to talk to you.
Well, great to have you here. You at 22 want to be a saver and investor.
I do.
Tell me.
So So I'm 22, and I graduated last weekend from a 4-year university debt-free, and today's actually my first day at my new job in my career path. And so I'm kind of wondering what my best options are right now.
All right. Well, first of all, think how many of your fellow college graduates are green with envy that you graduated from college debt-free.
I was very lucky.
That is great. So now, right from the get-go, you're prepared to be able to save and invest for the future. The employer you've gone to work for, is it big company, small company, in between?
It's big within the state. I want to say they hire maybe around 150 employees, but it's not like super huge.
All right. What kind of retirement thing have they told you they have? Do they have anything?
They offer a 401k option, but that doesn't begin until a year after I work for the company.
Oh, then this is easy. At 22, if you set up a Roth IRA,
okay,
and you fund it, how much money are you capable of putting aside each pay period or each month?
So I've got it worked out to where each pay period, like the first pay period of the month, will take care of all of my expenses for the month, and then the second pay period is basically money to invest or spend or put away.
Wow. Oh, man. This is great. So you can put $5,500 into a Roth this year. Each year is $5,500 what you can put in.
Okay.
As close as you can get to that, doing that in your early 20s, it makes a massive impact for you down the road.
Awesome.
So I would put all your efforts into putting money in a Roth IRA, and look at my investment guide at Clark.com. You'll see how to set up that Roth in 10 minutes or less.
Okay.
And start funding it. And then a year from now, when you're eligible for the 401k, why don't you keep doing the Roth and then also start contributing the 401k? You're going to create enormous financial strength for yourself as you look down the road. Good for you. You got a question for me? Well, you can post it at Clark.com, and then maybe Joel will read it on the air. We call it Ask Clark. Joel, who do you have our first one from?
Clark, we got one from Lori. She says, my husband and I both wear glasses. We're looking for vision insurance. Do you have any tips on finding a good plan?
Unless you work for an employer that subsidizes a vision plan, and then in turn you have the list of places you can go, you're best off not buying a vision plan. Individually sold vision plans in the marketplace are not the best. The reality is that if you buy from discount sources, the places that sell you glasses online very inexpensively, you will spend a lot less money than you would on a vision plan. Some of the vision plans will include a discount on an eye exam, but again, you're paying a premium for the vision coverage that, if you don't have an employer subsidy, is not worth it.
All right. Alan says, I have a rental house and my prospective tenant wants to pay with a credit card. How do I accept credit card payments?
You can with Square Cash, but your tenant will have to pay 3%, I think is 2.75 or 3% to use so they pay it, not you. So their rent would be surcharged essentially 3% to pay you with a credit card. Square Cash makes it really easy for you. On the other hand, if they pay with a debit card, you would be able to receive that for free, and they would be able to pay you for free using one of the payment platforms like Venmo or Square Cash. So it is possible to do these things with the electronic transactions instead of a tenant having to write a traditional check. But paying with a credit card, it's a problem for the tenant. I'm so glad you're with us on the Clark Howard Show, where it's about you learning ways to save more, spend less, and avoid getting ripped off. Our web address is clark.com, CLARK.com. You can follow me at facebook.com/Clark Howard. U.S. stock markets set a record. All indices set a record. Indices, indexes, whatever. They all went up to record highs last week. Looks like today may be a new record for various stock indices, indexes, whatever. Big companies, setting a record, tech companies setting a record, the Dow, the 30 largest, the S&P 500 biggest companies in the country, then the tech-oriented sector, all at records. Specifically and significantly a change for the tech stocks. The tech stocks, it took from year 2000 till now to get back above where stocks were then. So they've basically run in place for the last 16 years. But now you got all these stocks at record values. And what happens with stock markets is they overshoot on the downside, they overshoot on the upside. So there's a lot of people out there making noises that you should consider getting out because the sky is going to fall. I can't speak for the sky. Sky looks okay right now. I just looked outside the studio. As for stock markets falling, yeah, it happens. They go in cycles throughout history, up, down, up, down, up, down, up, down. The reality is, though, it is impossible looking forward and only in hindsight looking back to be able to see what happened. You cannot predict the movement in the short term. It is impossible. What you can look at is historically, because stocks are only a proxy for economic growth over time and in turn the growth of profit-making enterprises, that human ingenuity being what it is, unless a meteor hits the earth, that over time humans creatively come up with ways to provide stuff that gives us a better life or more enjoyment in our life. And that's the idea about why you want to be an owner, is that the creative energy of people that build businesses and you in turn being able to own parts of those businesses through stocks or mutual funds or whatever, that you ultimately over time make money. But in the short term, stocks will crater from time to time and then they recover. When do they crater? How far is the bottom? How far up is the up? Nobody can predict that. And anytime you look at data that people collect about what happens to people who try to jump out and jump back in, is that you end up with a lot less money than you would have otherwise. There was something I saw about the returns that a professor did that found that people who were jumping out because of the declines last decade and moseyed their way back in have gotten only a fifth of the return of people who just rode the market down and then rode it back up. So in the short term, just sitting there and taking your licks hurts. And it's just the fact that it does hurt when your statements show a shrinking balance. So you feel like, I'm going to stop the hurt. I'm going to get out. I'm going to get back in. This is the word that has always killed me. I'm going to get back in when it's safe. Well, what people mean when they say they get back in when it's safe is after markets have started a meaningful recovery, and then they decide to get back in after things have heavily recovered. It is too hard to figure out when to get in and get out. And particularly if you're younger than 45, you just stay in the game. If you're over, you want to make sure that you have yourself well diversified. But the values of today make me very aware that we're ready for a fall. When it happens, don't know. How far it falls, I don't know. But I'm changing nothing because my whole thing is long-term growth. If I ever lose faith in the ability of human beings to create new ideas, new businesses, new ways of doing things, then I would lose faith in being an investor. Until that point, I'm in. Robert's with us on the Clark Howard Show. Hi, Robert.
Hi, Clark. How are you?
Great, thank you. You have an investing question for me.
Yeah, I was wondering what you thought about penny stocks. They look very inviting. They look fun. It doesn't seem like you have to invest a whole lot of money and you get a lot of stocks. But is it really nothing more than gambling?
It may be worse than gambling, to tell you the truth, because the problem with penny stocks is they're penny stocks for a reason. Usually stocks that are no longer traded on exchanges and trade at, they're referred to as penny stocks because they may be at very low values. They're usually referred to as stocks below $5 a share. The reason they're at the low prices they are is because they're usually failed enterprises. Did you know, Robert, that a lot of the things that are trading as what's called the general umbrella as penny stocks are companies that basically have ceased to exist?
Well, I was looking at some companies that have invested a lot of money in medical technology, maybe startup pharmaceuticals or even equipment. Or looking for cures for different diseases and so forth. And some of them I've seen look like they put a lot of money into it, so it seems like they're serious. But, it's like if they're successful, it seems like you could make some money. But it seems like a roll of the dice.
It is a roll of the dice, but you brought up a point so much more eloquently than I did, and I should have, is that one of the greatest areas of fraud in penny stocks, and that area with the false stock touts, are people that are saying that there's a new medical device maker that's come up with a breakthrough that's going to change treatment of this disease or that disease, or there's a new biomedical that is going to totally change people's lives with this kind of cancer or that one or whatever, that it is an area where it's very easy to blow a lot of smoke. So I'll tell you this, if you are fired up about doing this kind of investing, I would say that this is more speculative, and only money that is your play money, that it would make no difference in your life if you lost it, could you put into this. And you also have to be prepared, eyes wide open, that you might get scammed.
Correct. And the only thing I go by is, if I go on to something like Yahoo stocks and I bring up a company, I look at the company newsletters and see some of the meetings they've had and breakthroughs they've had, and you do have to wonder if a lot of that is a lot of hot air, And
unfortunately, a lot of times it is hot air. So how much money are you thinking of putting in play?
Oh, I was only thinking of maybe playing somewhere around between $500 and $1,000.
So money that there's going to be no sleep lost over.
But not a lot.
Okay, the only thing is you don't get to go to a show. If you go to Vegas and you're losing money at the tables, at least you can go take in a show at the casino.
Yeah, and maybe a free drink.
Right. So you don't get any of that.
No. Okay, well, I'll have my eyes wide open to this, but they do make it enticing.
I know, and it's been an area that has been a source of fraudsters for decades with penny stocks. So I urge extreme caution in this area. Never get in with any amount of money that you actually need to live on. Barbara's with us on the Clark Howard Show. Hello, Barbara.
Hi, Clark. Thanks for taking my call.
Sure. You got a question about your kids.
I do. My daughter's Social Security number was stolen out of a car. A hospital worker took the information home. And
Wait. A hospital worker broke into your car?
No. A hospital worker took her information home.
Oh.
And someone broke into their car, and because they left it in their car overnight, and they broke in the middle of the night and stole the information.
And were they actually stealing a laptop that had your daughter's and other people's information on it, or was it?
Well, yeah, this has happened twice. The first time was when she was first born in the hospital, and they were just files. And this time it was on a computer that somebody took home.
And how many people's records did they get besides just your daughter? Do you have a sense of that?
Yeah, apparently they got quite a few. The first time it happened, I remember calling the credit companies trying to do something about it, and at the time, that's been almost 16 years ago, so they wouldn't do anything really about it. They offered me the year credit monitoring, and then I had to go and pay for it myself afterwards. So far, nothing's come up, but I'm just curious, how do you check out their credit report before they apply for financial aid?
Great question. So now in roughly half the nation's states, you can set up what's known as a child credit freeze. And what state do you live in?
Oregon.
Oregon is one of the states that has child credit freeze. So what it allows you to do is that you as a parent can create, because many times a kid won't even have a credit file, but the credit bureau will essentially create one for your minor child, and then we'll see if any activities happen, they'll let you know, and then you can freeze it, lock it down until they get to an age that maybe they're applying for college financial aid, and then you thaw that report.
Okay, well, she's 16, and so starting this fall, we're going to be applying for financial aid.
So that makes it a rough call, because if the information is now floating around and somebody might want to pretend to be her, it could hit right smack in the middle of her attempting to apply for college and potential financial aid. And then, we've had these terrible stories where people can't go to college yet. They have to wait a semester or a year till they can get the problems with their credit file cleaned up. So at 16, it might actually be worth it to go ahead and put the freeze in place. And then when it comes time to applying for financial aid, which would actually be 2 years from now, at 16?
No, actually, it would be this fall. They're wanting them to start
with the FAFSA this fall.
Correct.
Wow, this is tough. Maybe you wait till after she's done her FAFSA and then freeze the credit, and then when it's time that a school actually needs to check her credit for financial aid, then you thaw it again.
Yeah, I'm just wondering if something is on there and someone is using it. I mean, I don't even know what to do.
Well, that's why the credit freeze stuff for kids is what you should do. Why don't you go look at my guide at clark.com and see if you want to proceed, because it's a privilege you have in Oregon that, again, people in half the nation's states don't have yet, that you can put the worry aside and know that no bad stuff is going on and prevent bad stuff from happening, except when it's thawed for the financial aid applications.
Okay, so there's no way to get on somewhere and check to see if anybody's been using her credit.
There is not. The credit bureaus don't have any interest in that, and so that's why all the work is on your shoulders.
Okay. All right. Well, thank you.
Sure, and nothing happened, as you know, from the first breach, right?
From the first breach, no. After I got the first free year of credit monitoring, and then these second and third, I didn't see anything, so we stopped doing that. And so I haven't seen anything, coming to the house or anything, but that doesn't mean that someone didn't steal it.
Right. Well, let's hope you find nothing bad at all, and this is just a false alarm. Jay joins us on the Clark Howard Show. Hi, Jay. How are you doing today?
Hello, Clark. Thank you for taking my call.
Certainly. Jay, you have a question about something that people used to use in prehistoric days called checks?
Yes.
How can that be of service?
I recently changed banks, and I was looking online to see if there's an alternative way of getting checks. I still use checks, but my bank is charging me a little bit too much for a few checks, and online I see the price is perfect, a lot of checks for a very low price, but they're asking me for my routing number, account number, and credit card, and I didn't feel comfortable giving so much information.
I'd feel just fine with that. The people that print checks for consumers are generally the same people that print checks directly for the banks and credit unions. And so you're dealing with a consumer division at most of these places. And so providing the information is just fine. The biggest issue with ordering checks online or ordering checks from a bank is if the checks get intercepted on the way to you. That's the danger. Not that I know of no circumstance where there's ever been a problem, Jay, where there was an inside job at a check printer where they took the information and committed crimes with the information. So I would feel absolutely fine buying, from the Sunday newspapers where they'll have those colorful inserts, those glossy full color things, and they'll have things in there where you can order. Your first order of checks is like 1 million checks for $3.99. Those things, it's fine to use those.
Okay. Well, I'm glad to know that.
And the thing that will surprise you, if you're like most people now, you'll write so few checks that you'll do just fine with whatever starter check deal you get from one of those coupons. It'll likely cover you for, 10 years. As far as the number of checks I write a year, it's probably less than 5 checks I write all year long. They're going into oblivion.
Thanks for listening to the Clark Howard Podcast. Download new episodes every Monday through Friday at podcastone.com. That's podcastone.com. Stay tuned for the latest AP news headlines from Podcast One right after this.
When shopping for car insurance, consider this. Geico has been saving people money on car insurance for over 75 years. So if you're serious about savings, it's simple. Go to geico.com. After 75 years, they know how to save you money.
AP Update, I'm Diane Kepley. After 2 nights of unrest, there was relative calm last night in Milwaukee. Police Chief Ed Flynn says there were only a handful of arrests.
We did have some confrontations with individuals that were heated. We made a half a dozen arrests. That seemed to have some impact.
But this man says protesters did take stones from his yard to throw at the police.
Kids were out here, they had masks on, scooping hands full of rocks, throwing them at the police, and they were hiding on the side of the entrance to my upstairs, and I told them, get out of here. Don't bring that stuff over here.
The protests were sparked over the weekend when police stopped a car and an armed man ran away from them. That man was shot by police. A body camera video the officer was wearing has not yet been released, but it reportedly shows the suspect turning toward the police with a gun in his hand. The city's mayor has imposed a curfew on teenagers and has urged adults to make sure those teens are off the streets at night. AP Update, I'm Diane Kepley.